Hello and welcome to today's Office Hours presentations. This is Paul Hoyt. Our Office Hours presentation is a relaxed informal mentoring program that we do every Monday at noon Pacific time, about 47 Mondays out of the year. All of these recordings, slides, and exercises are archived in our members area, and the recordings are available on my YouTube channel at youtube.com/user/Paul Hoyt for the time being. The reasons we do this is because being a successful small business owner can be a great experience, but it is tough. You need education, training, and tools and team in order to be successful. And we want you to get to know us, because when you get to know us, you'll realize that first and most importantly, we really want you to know that we care about you. We want you to succeed in every area of your life, whatever that means to you. We want you to find the greatness, the happiness, the divinity within yourself, and remember it, embrace it, and live it every single day as we try to do. Our passion is to increase the survival rate, accelerate the growth rate, and reduce the struggle rate of businesses in America. And our vision is to help millions of CEOs and entrepreneurs accelerate their business growth and enjoy greater harmony and balance in their lives. And you can help by passing the word. If you find any of these office hours recordings or sessions valuable to you, please pass along our contact information on the paulhoyt.com website to anybody that you know that you think might gain benefit from them as well, because we are indeed passionate about doing everything we can to support small business owners in the United States. Our office hours agenda is an in-depth discussion of a business success principle or a book that we've read. Then we offer some closing remarks, some special offers, and an invitation for next week's session. And then we go to open questions and answers and coaching. So during the course of the conversation of the session today, be sure to write down your questions. You can type them into the GoToWebinar control box, and we'll answer your questions and maybe even take you off mute and give you an opportunity to ask it one-on-one. We also invite you to join us online in social media with the Awakened CEO communities that are both on LinkedIn and Facebook, where 4 times a week I do a business success principle of the day posting, and every day I do an energy of the day posting on Facebook. I think today's posting was number 633, which was on being festive. So I really enjoy the opportunity to get up every single morning and say something encouraging and positive to the world out there. During our call today, we invite you to go to the Facebook Awakened CEO community and make comments and ask questions and share your insight and any takeaways that you get from the presentation. Our goal is to have 20 comments and likes in that Facebook group. A week from Wednesday, we're going to have another Awakened CEO conversation. The next one's Wednesday, August the 26th at 6 p.m. Pacific time. Watch your emails for sign-up information. These office hours presentations on Monday are about 90% focused on business, and the conversations that we do, the Awakened CEO conversations, are focused on mindset. They're focused on personal and spiritual growth and how important that is for those of us who are CEOs to focus on being the best person that we can be, in addition to having a very profitable and strong business. Today's topic is on to be or not to be taxed. It is a primer on nonprofits. As many of you know, most of the work that I do, 95, 97% of the work that I do, is focused on for-profit enterprises. But I meet a lot of CEOs and entrepreneurs, especially those who are just getting started, who wonder whether or not they should have a nonprofit or a for-profit, or what kind of relationship they can have with a nonprofit, or people who are running nonprofits who wonder about the type of relationship that they can have with a for-profit enterprise. So today we're going to talk about all of those things and much more. As always, we try to relate the subject matter of the day to one or more of the key performance areas of business that I defined in my book in 2004 called The Foundation Factor. And today we're going to be talking about all of them. The decision that you make whether to have a for-profit or a nonprofit is instrumental in every single area of your business, in what you sell, in the products and services that you develop, in the way that you do that, in the way that you deliver your services, in the way that you keep track of your finances, the way that you design and implement your business model. It's all critical to the decision on whether to have a for-profit or a nonprofit. We also like to relate the subject matter of the day to the 3 different levels of performance that we define in the Awakened CEO system. We say that it's important to you to focus on your mindset, on your methods, and on your momentum. And today it's really all about methods. It's how do you take this passion that you have to help other people and support them in their life and turn that into a business. And this is about the method, the organizational structure, your plans, and the way that you design and implement your infrastructure is about the methods of business. You need to make these decisions and create great plans, internal processes and procedures before you can get into activity and build your momentum and maintain your momentum. Today we're going to talk about for-profits versus nonprofits and compare the two. We'll talk about IRS rules and definitions. We'll talk about the types of nonprofits, the challenges that nonprofits face, the relationships between for-profit and nonprofit entities. We're going to talk a little bit about B Corps and offer some considerations, some insights on whether or not you want to start a nonprofit, and we're going to sum it all up to the bottom line. First, let's get started with the differences between for-profits and nonprofits. So for-profit businesses are owned by the founders, the investors, and other shareholders of the company. Other shareholders might be, for example, your employees of the company or somebody that you give stock grants to or stock options to. Not necessarily founders or investors, but in some way they become a shareholder of the company. Nonprofits, in contrast, are owned by no one and owned by everyone. There is no concept of ownership of a nonprofit. There is management of a nonprofit, an executive direction of a nonprofit, but not ownerships of a nonprofit. Nonprofits have stakeholders who are typically the people who work at the nonprofit and the target audience or the target community of the nonprofit, but they do not have shareholders. For-profits pay taxes, and nonprofits are tax exempt, and interestingly, the contributions to a nonprofit may or may not be tax deductible. So you do have to watch that, and we'll cover that a little bit more when we talk about the types of nonprofits. Now I'm going to get into some pretty structured definitions and rules here, so bear with me for the next several slides as I read these very critical definitions from the IRS website itself. A nonprofit is an organization that uses its surplus revenues to further achieve its purpose or mission rather than distributing its surplus income to the organization's directors or equivalents as profit or dividends. So there is no concept about distribution of profits or asset value of a nonprofit. Any surplus that you have from the donations that you receive or the money that you earn from unrelated and related business income has to be kept in the nonprofit, and typically it's kept in terms of an endowment or it's kept in terms of having a surplus and then distributed or used to further the mission of the nonprofit over time. Here's some very specific IRS rules for you. To be tax exempt, and this is specifically under 501c3, which is the most common type of nonprofit enterprise, to be tax exempt under section 501c3 of the Internal Revenue Code, an organization must be organized and operated exclusively for exempt purposes set forth in that section, and none of its earnings may inure to any private shareholder or individual, which means that none of the earnings, none of the donations received, none of the funding received by a charitable organization, a 501c3, can be used for the benefit of an individual or any private shareholder, which is kind of an oxymoron because nonprofits can't have a shareholder. Probably should read stakeholder, but I think I quoted the IRS correctly. In addition, it may not be an action organization. The nonprofit may not be an action organization. In other words, it may not attempt to influence legislation as a substantial part of its activities, and it may not participate in any campaign activity for or against any political candidates. So if you have a nonprofit church, for example, individuals in that church may be proponents of any one particular candidate or may speak against a candidate, but the church itself cannot, as an officially sanctioned activity of the church, be for or against any political activity or any political candidate, for example. And organizations described in Section 501c3 are commonly referred to as charitable organizations. Organizations described in that section, other than testing for public safety organizations, are eligible to receive tax-deductible contributions in accordance with IRS Code number 170. Pardon me a second. There are some very important concepts about nonprofits that I want to talk to you about here for the next 5 or 6 slides. Those important concepts are organization, limitations, assets, exempt purposes, and charitable purposes. So first concept of a nonprofit is organization. A nonprofit is a corporation or an unincorporated association, community chest, fund, or foundation. An individual cannot qualify as a nonprofit. So as an individual, if you are in business, you are by definition a sole proprietor unless you have founded and created another form of organization, a LLC, an S Corp, or a C Corp being the most prominent ones for an individual. But an individual itself cannot be a nonprofit enterprise. So you cannot, for example, declare yourself to be a nonprofit and therefore not pay taxes. I know there's been people try that before, and they always end up jail when they do. So don't do that. There are limitations on nonprofits that we do not see on for-profit enterprises. The organizing documents of a nonprofit limit the organization's purpose to exempt purposes and must not expressly empower the organization to engage other than an insubstantial part of its activities in activities that are not in furtherance to one or more of those purposes. We'll talk about that a little bit later, but what this means is a nonprofit has to have a declared specific purpose and intention, a specific mention, and cannot engage in business activities generally that are outside its specific intention, or they may violate their charter, they may have their nonprofit status be withdrawn, or at a minimum, they will have to pay taxes on what they call unrelated business income. That's not the same as for-profit enterprises. Typically, for-profits are formed with the intent of doing almost anything they want to make money. There's no limitation on a for-profit enterprise as to what business activities that they engage in, but there are when it comes to nonprofits. There are also important concepts around assets. In addition, an organization's assets must be permanently dedicated to the exempt purpose. This means that if an organization dissolves, its assets must be distributed for an exempt purpose to the federal government or to a state and local government for the public purpose itself. So the assets of a nonprofit are owned by the nonprofit and not by anyone else, and they cannot distribute them to anybody else, no matter what. And by the way, what that means is when you make a loan to a nonprofit, you cannot capture the assets of that nonprofit in repayment of the debt that you have with a nonprofit. So people who make loans to nonprofits, there is in essence no collateral value to those loans whatsoever. The nonprofit must be organized for exempt purposes, and here's a listing of those exempt purposes: charitable purposes, religious, education, scientific, literary, testing for public safety, fostering national or international amateur sports competitions, and preventing cruelty to children or animals. Let's take a bit better look at the charitable purposes, because this is the last important concept that we'll talk about. There are a lot of different charitable purposes under which you can organize your own nonprofit: relief of the poor, the distressed, or the underprivileged, advancement of a religion, advancement of education or science, erecting or maintaining public buildings, monuments, or works, lessening the burdens of government, lessening neighborhood tensions, eliminating prejudice and discrimination, defending human and civil rights secured by law, and combating community deterioration and juvenile delinquency. So there's a lot of different options out there. There are a lot of ways in which you may gather a community of people together and gather donations and use them for the betterment of society in an organization that's owned by no one and everyone, in order to help each other out. As it turns out, there are a lot of different types of nonprofits. Generally, so far, we've been talking a little bit about a 501c3, but there are a lot of other types of nonprofits as well. In fact, there are 34 other types, or total number of types of nonprofits that I could find, and I suspect that there's a lot more, because as I was doing my research, I was able to find a lot of examples that I don't think that I'm going to list on the following slides. And speaking of the following slides, I've got 7 slides with 5 different types of nonprofits each, and you'll be happy to know that I'm not going to read through them like I had read through the definitions that I thought were so important. I did want to include them in the slides and talk about a few of them so that you could have an opportunity to go through and look at them a little bit if you need more detail than the most common ones. But let's take a look at these 34 different types of nonprofits, and I'm just going to talk about a few of them. There's, as you might have suspected when you hear the term 501c3, that there might be a 501c1 and C2 and C4, and indeed there are. In fact, there's 501c1 through 29. The 501c3 being the most popular of them. That's the religious and educational and charitable organization that is doing good throughout the world. And when most people think of a nonprofit, they're thinking of a public charity, which is the 501c3. But there are different types, like a 501c4 is a civic league, a social welfare organization, or local associations or employees, or a homeowners association, for example, is a 501c4, may also be a 501c6, I believe. And speaking of 501c6, that's one of the most common ones on the next slide. A 501c6 is a business league, a chamber of commerce, a real estate board, etc. is a 501c6. You'll notice that a 501c10 is a domestic fraternal society and association. So all of those Greek fraternities and sororities that you see on college campuses are most likely organized as a 501c10. And there's some really interesting ones as we go down the list here. A cemetery company is a 501c13. A 501c19 is a post or an organization of the past or present members of the armed forces. And curiously, most of the times the deduction to those, especially in the forms of membership dues, are not tax deductible. You'll notice when you take a look at these slides in more detail that sometimes the contributions to a nonprofit are tax deductible and sometimes they are not. Generally, they are not if it's a 501c19. Here's an interesting one. 501c23 is a veterans organization created before 1880. So nonprofits have been around for a long, long time, and certainly some of the veterans organizations were created before 1880. And I guess they have a type of nonprofit that was for veterans organizations since 1880 and the ones before 1880 as well. And here's an interesting one. 501c28 is a National Railroad Retirement Investment Trust. And I think here's an interesting one. As we get out of the 501c's, we get into the 501d's, e's, f's, and g's, and k's, etc. A 501d is an organization which is a religious or apostolic association designed specifically for communal living. And frankly, I don't know whether or not contributions to a 501d are tax deductible or not. I couldn't find any reference to that as I did my research. So keep in mind that as you form a nonprofit, or as you think to form a nonprofit, that you have a lot of options available to you, from the 501c3 up to the 501c4 and the 501c6 and the 31 other types of nonprofits that are allowed by law in the United States. Nonprofits have their fair share of challenges, and I want to talk about that for just a minute as well. So challenges for nonprofits include funding. Funding is by far the biggest challenge that any nonprofit faces. Nonprofits generally rely on external sources, especially public contributions and especially grants from year to year. I've talked to many people who are employed by nonprofits or who are managing nonprofits that found themselves in a bit of a pickle and a heck of a dilemma because they had been receiving the same grant year after year after year, usually one or more grants that were funding a considerable amount of their activities, only to find out that that grant was not extended to them or had been greatly reduced. And all of a sudden, they found themselves in a funding dilemma, that they were unable to carry on and do the programs that they wanted to do because one of the grants that they had relied upon for year after year after year was no longer going to be available to them. I talked to a gentleman who had that challenge just a couple of days ago. But funding is by far the number one challenge that nonprofits have. Generally speaking, they can't go out and introduce a new product line. They can't introduce new marketing campaigns. They can't expand into other territories. They don't have near the options that for-profit enterprises do when it comes to increasing the funding, the contributions into the organization. Board members can be a huge problem with them, and volunteers. Most of the work that's done at nonprofits, as it turns out, is done by volunteers. And finding board members who will agree to be on your board of directors as volunteers, and finding other people who will work at your nonprofit as volunteers and managing those folks at your nonprofits can be a huge challenge for you. There is something called founder syndrome, which is the same at a for-profit and a nonprofit. Sometimes at a for-profit, we talk about it being time for the CEO to get out of their way. And with a nonprofit, sometimes it's time for the founder of the nonprofit to get out of the way as well, because of limitations that they have in their psychological profile that somehow limit the growth or the expansion of the nonprofit or limit the direction of a nonprofit. In a for-profit enterprise, if you own a majority interest in the for-profit and you have disagreements with your board of directors, you can always take it to a vote of the shareholders, and you may be able to override the direction and the voting of the board of directors of a for-profit if you have a majority interest ownership in the for-profit. But that's not true with a nonprofit. With a nonprofit, it is run by the board of directors, and it's run on the basis of one person on the board gets one vote, and it's always a democracy for the board of directors, and there is no recourse. Whether you founded the nonprofit or not, you might have been the lifeblood, the spokesperson, the heart and soul of that nonprofit for a long time, but you don't have any recourse if you find yourself to be in conflict with the board of directors. And oftentimes we see the founder of a nonprofit ousted after some point in time by the members of the board of directors, and that can be, it's always a very painful time for the founder of the nonprofit, but it does happen from time to time. Nonprofits generally pay less than for-profits, but not always. I know of some nonprofits that pay their members of the board of directors, the executive directors, well into the six figures, $400,000, $500,000, $600,000 a year in their compensation. Their justification is that, if I were running a $500 million for-profit enterprise, I could expect to have a $500,000 a year salary, or even more, maybe $1 million or $2 million a year salary. And as an executive director of an extremely large nonprofit, that is justified for the nonprofit to pay me, hundreds of thousands of dollars in compensation. And I think there's some merit to that argument, but generally speaking, nonprofits pay less than for-profit enterprises do, not only with the executive directors and the management team, but with the clerical staff and the administrative staff as well. They have a kind of a volunteer mindset and a family mindset, which is different from the mindset of a for-profit. And one of the big challenges that they have is unrelated business income. So remember, we talked about one of the limitations of a nonprofit is that they have to do business specifically for the purpose in which they were incorporated. Let me give you an example of unrelated business income that is in fact taxable income. If you have a university, and in the student union of your university, you run a pizza parlor, the income from that pizza parlor is not tax deductible. In fact, it's unrelated business income, and you have to pay taxes on that. And I think in some cases the rent to a third party who's running the pizza parlor may also be unrelated business income. My advice to you, of course, is if you have a nonprofit, to be sure to talk to your CPA and your attorney about what sort of income sources that you can have that are directly related to the purpose and mission of the nonprofit versus those which are indirectly related or not related at all and may be unrelated business income and therefore taxable. Again, as we stated, there are limitations on what a nonprofit can do without it violating their charter and without it being taxable unrelated business income. And the last one is political affiliations. Sometimes churches, especially churches, can't help themselves but becoming involved in politics. And again, as we talked about earlier, churches and other nonprofit organizations are prohibited by law from being involved in any political issue, to supporting or not supporting any one particular candidate or any one particular issue that's out there. Individuals, maybe even prominent individuals within a religious community, can endorse things privately and individually, but they cannot do it on the basis of the religion itself. When it comes to relationships between nonprofits and for-profit relationships, it used to be very, very arm's length, but today we're seeing a little bit of closer relationship. What we're seeing today is joint ventures and marketing partnerships being much more common. In fact, the term cause marketing, if you look that up for yourself, you'll see that that's what it's all about. It's about a relationship between a for-profit and a nonprofit that benefits the nonprofit because they get increased exposure, oftentimes services from the for-profit and donations, and the for-profit benefits because they have an improved image. They're seen to be a socially responsible company, and that gives them greater loyalty from their customers and from their employees. If you are a for-profit enterprise and you are known to be a socially conscious and socially responsible enterprise, you can enjoy, say, a 5% increase in your prices, maybe even a 10% increase in your prices, because people will want to do business with you consciously and subconsciously because they see you as a good company to work with, as a good company to support, and they will pay higher for your products and services than they would to a company that they see that's not seen in their mind as being a socially responsible enterprise. There are some challenges, however, when it comes for nonprofits and for-profits working together. Common management is a big challenge. Generally speaking, don't overlap the management structure between a nonprofit and a for-profit, and limit the business transactions between the two, especially sole source relationships. So if you have a nonprofit enterprise and you only are hiring one for-profit enterprise to supply a product or supply a service in some way, you are a little bit at risk that that's seen to be an enterprise that's benefiting one particular individual or one particular company. So my advice to you, if you have a nonprofit, is to spread the wealth a little bit, to do business with multiple for-profits so that you're not seen to be for the benefit of any one nonprofit or for-profit enterprise. There can be especially challenging if you're a nonprofit that owns a for-profit enterprise. I had a client like this early on in my career as a business consultant, that they were a for-profit enterprise, and with some of the surplus contributions that they had purchased a for-profit enterprise, and they had some big challenges in that the compensation plan was not the same, the management structure was not the same, and they had a lot of problems in the nonprofit, in the ownership of the for-profit, and the for-profit that they owned was also being challenged as well, because there's a nonprofit mentality that was kind of seeping into the for-profit, which was causing them challenges when it came to paying sales commissions and raising prices, etc. So here's some guidelines for nonprofit and for-profit relationships. Make sure there's a strategic fit between the two enterprises, that there is a common brand, that it makes sense for these companies to be working together. Make sure that the charter of the nonprofit is upheld and that there's not an extensive amount of unrelated business income. And I would say limit the transactions between the ventures and limit common management. By limit common management, this means that if you are a for-profit enterprise that has a significant relationship with a nonprofit, you may have one member of your for-profit enterprise that sits on the board of directors of the nonprofit, but not very much more than that. You have to make sure that the nonprofit is being run by the board of directors of the nonprofit and not unduly influenced by any sort of outside influence from a for-profit enterprise. You have to be in integrity and above the board, open in every relationship aspect that you have between the for-profits and the nonprofits. With that, I want to switch a little bit and talk about B Corps. B Corps didn't used to exist. This is a brand new type of organization that I wanted to do a little research on, and I'll share with you what I found about B Corps. So B Corps are for-benefit organizations. They have to be for-profit entities that are certified by one particular nonprofit enterprise called a B Lab, or called the B Lab, in order to meet rigorous standards of social and environmental performance, accountability, and transparency. In the case of a B Corp, the business is being used as a force for good, much like a nonprofit is, but they are not a nonprofit entity. They are a for-profit entity. They have no tax-exempt status, and they can't be a public company. B Corps are a mission-driven company instead of one that is driven to increase shareholder value. And the biggest reason B Corps exist is because that they get legal protection in 28 states as of October of last year from investor lawsuits. So by definition, a for-profit enterprise exists for the shareholders of that enterprise, for the founders, for the investors, and for other shareholders in the enterprise. And if the enterprise is doing something that is not in the best interest of the investors in that enterprise, the investors have the right to sue the corporation. The most common lawsuit that we see is that somebody, a for-profit organization, is given an invitation for acquisition or merger with another enterprise. The board of directors of the for-profit enterprise turns down that invitation for acquisition, and then they're sued by their investors, by the shareholders, for not taking advantage of the opportunity to sell the company. With a B Corp, you are, because of state legislation and because of your official status as a B Corporation, you are deemed to be exempt in those states from those sorts of investor-led lawsuits. The B Corps are primarily used by entrepreneurs who want to raise capital for their venture, but they don't want to risk the mission of the business by having the investors somehow change the mission of the business to return a significant amount more to the investors. So a B Corp can accrue assets. A B Corp can pay dividends to the investors, to the owners of the organization, but a B Corp cannot be sued by the investors if, in fact, the investors want them to distribute, for example, more distribution of profits. And finally, before we get into the question and answer section, I want to talk about considerations on you thinking about having your own nonprofit. And the first one is kind of a tough one, but I want to invite you to ask yourself, am I doing this because I want to give to other people or because I want to create a job for myself? You can create a job for yourself in a for-profit enterprise. You can decide to be just the only employee at your business, or to create it as a sole proprietorship, or as a single member LLC, or as a single shareholder S Corp or C Corp. But you can't do that when you have a nonprofit. The nonprofit cannot exist to be the job of a particular individual, because that's seen by the IRS as being something in violation of their consideration. Almost by definition, if you want to create a nonprofit, you have to create it with the intention that you are going to hire other people in addition to yourself or instead of yourself. And you can't be the person that takes, say, for example, 80% of all the contributions that come into the nonprofits. In fact, I know of a person who had a nonprofit for a long, long time, providing services, providing training and programs to elementary schools. I think it was back in Virginia. For 20 some years, he had a nonprofit enterprise, but finally the IRS came back and said, this is not a nonprofit. You don't qualify, because the majority of the contributions that were coming into the nonprofit were being paid to you as salary and compensation for your services, and therefore you did not qualify as a nonprofit at all. So you got to ask yourself, are you starting the nonprofit because you don't want to sell? That's a pretty bad reason to doing it, because at a nonprofit you have to be very good at fundraising, and in fact that's selling people on the opportunity they have to be socially responsible, and they have to feel good about themselves by contributing to this nonprofit organization. So don't start a nonprofit if you don't want to sell stuff, because you do have to sell in a nonprofit. And don't start a nonprofit if you're just looking to start a very small organization and create a job for yourself. If you want to create a one-person nonprofit, make sure that it's not you that is the one person being employed at the company, and make sure that that one person is not in control of the organization. So that's kind of a tough thing to do, but you have to start a bigger enterprise if it's a nonprofit than you would if you were starting a for-profit entity. One of the other considerations you may have is the huge challenge in between differentiating your purpose, your mission, from other nonprofits that are out there, because you are in essence muddying the waters a little bit. You're contributing to the red in a red ocean whenever you start a nonprofit, and you have to make sure that is a significant enough difference in the eyes of those who would donate or contribute to your nonprofit that it makes a difference for them, and not that they would so much redirect their giving from another nonprofit, but they would give more. Make sure that it's a cause that isn't being handled and will cause people to reach further into their pocketbooks and donate more than they would have otherwise, as opposed to starting a nonprofit that takes away from the contributions to another nonprofit. Funding is always a challenge at starting up a nonprofit. I always tell people that first board of directors and the volunteers are by far the most important things, because that's what will get you on the track to funding. The most important person that you can get to come along with you on your nonprofit venture is somebody that's extremely well known, and hopefully somebody that's also wealthy and will contribute to your nonprofit. Find somebody that's known in your industry, known in your community, who can contribute a significant amount, and put them on the board of directors, and maybe even the chairman of the board of directors. Nonprofits also have issues when it comes to applying to be a nonprofit in the first place, and then ongoing administrative requirements and expenses. So it's not, it's just not easy doing a nonprofit. It's not easy doing a nonprofit. It's not easy doing a for-profit. My strong recommendation to you is don't think about starting a nonprofit because you think in some way that it will be easier than starting a for-profit enterprise, because I don't think it's going to be true. So here's the bottom line. I want you to study nonprofits before deciding to start one. And if you have a for-profit, or if you're thinking about starting a nonprofit, support an existing nonprofit before starting your own. If you can find a nonprofit out there that supports a community similarly in the way that you would like to support a community or a cause, think about putting your time and your money into supporting an existing nonprofit before you start your own nonprofit that by definition will consume more overhead and administrative time and expense, and will have less of those contributions and donations go to the very people that you want to serve. Avoid business transaction with a nonprofit that you start or in some way manage is always a good rule of thumb. And the last one about the bottom line is you can do a lot of good by supporting nonprofits with your time and your money, and I encourage you to do just that. I encourage you to be a socially responsible company. I encourage you to have cause marketing programs, or otherwise donate the time and money that comes from your for-profit to a social cause, to a nonprofit that you can be proud of and that will really support you in the relationship. That's been our agenda today. We talked about the differences between for-profits and nonprofits. We talked about IRS rules and definition. We skimmed over the list of the 34 different types of nonprofits that I was able to have. Indeed, I invite you to go to our website, download the slides so you can find out more about the different types of nonprofits if you're interested. We talked about the challenges that nonprofits face, the relationships between for-profits and nonprofits. We talked about B Corps and some considerations on starting your nonprofit. So here's your homework. If you are a for-profit, find a nonprofit that you can support. If you are a nonprofit, find a for-profit that you can work with. And I certainly encourage you to get legal consulting and coaching support every step of the way for either starting a nonprofit or for establishing a for-profit nonprofit relationship. Here in just a second, we're going to open up the lines for questions and answers. Invite you to have comments and questions and discussion on the topic of the day, and then anything else. I really would like to hear what your biggest takeaways are from our presentation today, what insights you have gained, and let me know what you're going to focus on. Here at the Hoyt Management Group, we are passionate and determined to do everything we can to help you be successful. We do it in three different ways. We teach you how to do it for yourself with our education and training programs. We do it with you with our collaborative programs, and in some cases, we do it for you. As consultants, we will put our fingers on the keyboards and design marketing collateral, develop sales content, do market research, etc. on your behalf. But by far, the way that we prefer working with you is in a collaborative fashion that helps you learn how to do it yourself while we are helping you do it in the first place. A reminder, a week from Wednesday, we're having an Awakened CEO conversation, which will be focused primarily on personal and spiritual growth. That's Wednesday, August the 26th at 6 p.m. Pacific. Watch your emails for invitations. And our next office hours will be a week from today on August the 24th. I haven't decided what I'm going to talk about yet. If you have some suggestions for our office hours presentations, that encourage you to go to paulssurvey.com or otherwise get into contact with us and pass along your suggestions. A lot of the presentations that we do are based on the suggestions from people who are in the Awakened CEO community, and we really do appreciate those. In between now and the time we talk again next time, do your homework. And with that, we're going to open it up to questions and answers. Stephanie, do we have any questions for today's conversation?
Hi, yeah, we do. We have one from one of our attendees
Okay.
Who wants to know, is there a minimum number of board members for a nonprofit?
I don't know that. That was something that didn't come up in my research. Generally speaking, for a for-profit enterprise, you have to have 3 board positions named. The chairman of the board, the secretary, and the treasurer have to be identified to the state itself. But that can just be one person. What I don't know is whether a nonprofit can be similarly organized with just one person holding all 3 of those positions of responsibility. My guess is that you could, because by definition, a nonprofit, especially a 501c3, is a for-profit enterprise that does the 501c application and the election to do that. So my guess is that you could, but I don't think it's a very good idea, because what we talked about earlier, the contributions and the donations coming into the nonprofit cannot be seen to benefit any one individual or any 1 or 2 individuals. So my strong encouragement is that you would have multiple people on your board of directors. Hopefully it was helpful. I'm sorry I did not know the answer to that question. Next question, Stephanie.
Well, just one little tidbit about that last question. The states also, whatever state you're incorporating in or you're creating your nonprofit in, has specific guidelines about your board of directors, who needs to be on it, how many, and that kind of thing too. So just check your state.
Thank you very much. I appreciate that, Stephanie.
Sure. Next question. What about the NFL? How can they be a nonprofit? I'm telling you, I'm there. How the heck can they do that?
Well, as it turns out, the NFL, only a very, very small part of the NFL is a nonprofit. The NFL is, more than 30 companies. So each one of the clubs themselves or the NFL teams themselves is a for-profit enterprise. So the San Francisco 49ers, the New York Giants, the Denver Broncos, all of those are for-profit enterprises. They are not nonprofit enterprises. As it turns out, there's another for-profit enterprise called NFL Ventures that owns all of the copyrights, all the intellectual property of the NFL, and they too are a for-profit enterprise. The trade association, as a 501c6, I believe, of the NFL is in fact a trade association of the NFL owners themselves, and that is a nonprofit enterprise. And of course they get a lot of money, and they pay, Roger Goodell got a salary of $44 million last year or the year before as a nonprofit enterprise. It's a multi-$100 million organization, probably more like $1 billion organization. I actually don't know how big it is, but it's incredibly huge. And they have, because of the public outcry, even though they were very legitimately a 501c6 organization, they have rescinded their nonprofit status. What they said was, we weren't making any money anyway, even as a taxable, even if we were taxed, because we take all of our money and we pay it out to the shareholders in the way that we do it and the way that we distribute the money, we wouldn't have had a tax liability anyway. They've decided to rescind their tax deferred status. So the NFL, you'll be happy to know, I think as of here in 2015, is no longer a tax-exempt organization because they gave up their status with the IRS. So now I told you everything I know about the NFL and them being a tax-exempt organization. Next question, Stephanie.
Well, you made me feel better, if nobody else, I'll tell you. So there. Here's another comment from our attendees. I had an understanding from someone starting a nonprofit that doesn't accept tax-deductible donations because it's easier to start up. When one gets going, they can apply for a 501c3 and then accept tax-deductible donations. She, like me, doesn't need to offer a tax deduction on donations because we're getting seed money.
That's an interesting way of doing it. I like that approach, by the way. Establishing the business, kind of get it going a little bit, and then apply for the nonprofit status. Of course, you have to do that with the consent of all of the investors and all of the shareholders in the business. Most of the ones that I know of, from the very beginning, one of the first things that they're doing is filling out that 501c3 application, and they want to become a nonprofit from the very beginning before they begin taking any contributions whatsoever, because they are, just because that's the way they choose to do it. So if you choose to do it in a different way, and you choose to put in your seed money into the organization and have an organization that has cash, and then you do the 501c3 election, keep in mind that all of the money that you put into it then is no longer your money. You don't have any rights to that money. It belongs to the United States, as a matter of fact. It belongs to everyone and belongs to no one at the same time. And I believe that you could get a tax deduction for that seed money that you put into it, but I'm a little bit unsure of that, so I strongly encourage you to talk to your tax advisors and to your attorneys about that. Great comment, great. I really appreciate that. Next question.
I have a 501c3 and didn't have to register as a business in a state, which is what I was told by the feds. Can you please comment?
I would love to comment on that, but boy, that's beyond me. I can't imagine any business doing business in a state without being registered with the state. So I would strongly encourage you to talk to an attorney or contact the Secretary of State. You can do it from a payphone, so it could be anonymous. But call them, call the Secretary of State or look up that particular Secretary of State and say that, I have a federally authorized 501c3 that's doing business in your state. Do I need to have a business license for your state? And my guess is that you do. Because states are clamoring for revenue. I can't imagine them not requiring a nonprofit to have some sort of business license or to be known to them in some way. You might get special deal on that, and maybe you don't have to pay for the business license, but my guess is that you have to have one. So that's strictly a guess, and I strongly encourage you to find more experienced support for that particular question. And I really appreciate that question. Thank you. Next one.
Yes. Is there a maximum amount of time a nonprofit can hold a surplus before reinvestment in the organization?
I don't believe there is, because a lot of nonprofits will take that surplus and put it in the form of an endowment, for example. So private foundations are a type of nonprofit that we didn't talk about today, but they like universities, for example. Harvard has a multi-billion-dollar endowment. Stanford has a multi-billion-dollar endowment. So they can take contributions and not distribute those or not spend that money as a surplus to their operating income. They can put it in the form of an endowment and make investments with it and operate the enterprise off of the endowment instead of operating the enterprise off of the income that receives, not income, but the contributions that they receive on an annual basis. So I don't believe that there's any limitation at all as to how long a nonprofit can hold on to the monies that they receive before using it for the good of the company. What I'd strongly encourage you to do, of course, is to be really smart about that. To take seriously your fiduciary responsibilities, and that means your financial responsibilities to that. And if I'm the member of a board of directors and I see that I've got $1 million in cash sitting in a bank account, then that's not taking responsibility the way that I'd like to see it be done. You should put that into some sort of an instrument that gives you a more positive return rather than just a traditional bank savings account or, God forbid, a checking account. Do something with that to get yourself a 3, 4, 5% return on your investment. Just like you would, frankly, if you had a for-profit enterprise. If you have a for-profit enterprise and you have a lot of extra cash sitting in the bank account, there are ways that you can do things that you can do with that to give yourself a lot better return on investment than it just sitting in a checking account or a savings account. Great question. Next question. I love these questions, by the way. These are really fantastic. Next one.
Okay. I was told that I was not required to file any tax documents as long as I didn't sell products. It's for a nonprofit ministry that they've had since 1996.
I don't believe that that's true. There is a Form 990 that I believe is required by every nonprofit to file with the IRS that explains, how your contributions were, what your distribution of those were. So if you haven't filed tax returns since 1996, then I would absolutely, get a hold of a CPA. That's a great question for a CPA. But my research that I did last week, showed that every especially 501c3, but every nonprofit organization has to file a form of some kind, and I believe it's a 990 or a 900. Pardon me for not knowing that number, and because I know that a foundation has like a 990F that they have to file. So I would definitely check on that. That doesn't mean, by the way, that you're in serious trouble. It just means that you probably need to dot your I's and cross your T's a little bit. Next question.
I'm sorry, there's just a little another comment on that. I was told that this was a special ministry account. He did it because he liked my ministry.
That I don't know. I mean, that's beyond my experience at all. Again, 95, 97% of the work that I do is with for-profit enterprises, and that one is more of a legal and a technical tax question. But if you're giving people tax deduction receipts for their contributions to your nonprofit, yourself or anybody else, my guess is that you have to be on record somewhere, and you have to be filing some sort of informational tax return, with the state and with the federal government on an annual basis. Next question.
Okay. What happens when a nonprofit dissolves?
When a nonprofit dissolves, as we kind of indicated earlier, all of the assets of the nonprofit, I think, can go to relieve the debts of the nonprofit to some extent. but generally they have to be distributed back to the federal government, a state government, a local government, or another nonprofit. So if your nonprofit goes away and you had chairs and desks and furniture and fixtures that were the property of the nonprofit, you have to give those to another nonprofit, or in other words, otherwise donate them to some charitable cause. What they cannot do is go to the people who work at the nonprofit or go to members of the board of directors of the nonprofit, because they have to be distributed. They cannot be the possessions of anybody, and nobody has the right to them at all. It's only governments and other nonprofits that you have to distribute those assets to. So that's generally what happens when you have a nonprofit. What I am, by the way, unsure of is whether or not the nonprofit needs to sell the assets and relieve the debts of the nonprofit, or whether those companies, banks, individuals that loaned money to the nonprofit are just out of luck when it comes to recovering any sort of return of the monies that they loaned to the nonprofit. I actually don't know the answer to that one at all. That's another one of those great questions to ask your CPA or to ask your attorneys. And I got 12:58, so we got time for one more question.
I'm starting a nonprofit that may need a small amount, excuse me, of some health products that I market. Could I arrange to donate my personal profits of the sales to the nonprofit to avoid any trouble with that?
And ask that one more time. I want to make sure I got the question right.
I'm starting a nonprofit. Okay. I'm starting a nonprofit that may need a small amount of health products that I market. Could I arrange to donate my personal profits of the sales to the nonprofit to avoid any trouble?
I think so. Yes, you could. For example, if the nonprofit was the example we gave earlier about the university that ran a pizza place. If your nonprofit is to support children, but you wanted to donate some health products to them and allow them to sell them for income purposes, my guess is that that's unrelated business income, and any proceeds from the sale of that merchandise would be taxable to the nonprofit. Now, if you had merchandise and you gave it to the nonprofit, that's a donation in kind, and I think there are limits on it, but I think generally donations in kind that you give to a nonprofit are tax-deductible donations to you. So if you bought health products and then gave them to the nonprofit, you would be able to take a tax deduction for the value or for the expense that you had in the products that you gave to the nonprofit. They would be able, but if they sold them, I'm guessing it's unrelated business income and it would be taxable income to them. If, on the other hand, if you take the products and you sell the products and then that becomes part of your business enterprise, the profits become taxable to you, but any monies that you donated to the nonprofit then would not be unrelated business income and would be tax deductible to you and not taxable to the nonprofit. So I think that'd be a good way to handle it. I think it would be much cleaner for you to sell it and donate the profits rather than to give them the merchandise and allow them to sell it and have unrelated business income. And with that, I've got 1 minute after the top of the hour. I want to thank you all for attending our office hours conversation live today. I want to thank those of you who are listening, watching, or just listening to the recordings for tuning into this office hours session. Invite you to join me next week when we'll have another session, and let me know if there's anything in particular you'd like for me to talk about. Invite you to join us a week from Wednesday for a next Awakened conversation. And until we meet again, this is Paul Hoyt wishing you a most marvelous and prosperous day. Bye-bye.